happy with that. Very happy with the reception. And, I think the interesting thing that happened when you have 11 ETFs approved at the same time, that's never happened before, the amount of energy and research communication that has gone out around this spot Bitcoin ETF opportunity.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Founder Cathie Wood. She discusses the importance of Bitcoin adoption, her passion in the subject, and why she is so bullish on the Bitcoin ETF and related macro aspects in her role as CEO of Ark Invest. Concentrating on particulars, we set a price goal of $1.5 million. We should not waste any time getting into the video because she is very eager about this sector. So please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
I think by all accounts is going very well. In the aggregate, we're thrilled with our positioning and actually somewhat humbled, I must say. So I think we're number 3 if you take out Grayscale. So very happy with that. Very happy with the reception. And I think the interesting thing that happened when you have 11 ETFs approved at the same time, that's never happened before, the amount of energy and research communication that has gone out around this spot Bitcoin ETF opportunity, has been unmatched. And I think it's done a great service for Bitcoin and digital assets generally, because this is just the beginning of a completely new asset class. Well, as I just mentioned, I think there's been a lot of communication about what Bitcoin actually is in this new asset class, leading the charge. I know that our research team, I know Yassine is there with you, has done an amazing job, not only in the last 6 months or year, but we've had research extending back to 2014. And so, and our first white paper in 2015 when we took our first exposure. And so we've been singing the praises of Bitcoin for a long time as a new asset class. So that's a start. But I do think there are some macro factors. I know Mike mentioned this earlier. We're very focused on what's going on in the emerging markets right now. I think with time, many more people will understand that the Fed, with a 24-fold increase in interest rates over little more than a year's time, has absolutely shocked the financial system around the world. Now, many people are looking at very short-term lagging economic indicators here in the United States, primarily because the Fed is doing that. But if you look at other signals out there, there are signals that not all is well in the world. I know Mike mentioned the Naira, the Nigerian Naira, which has devalued by 2/3 since last June. Now, Nigeria is one of the wealthiest countries, oil rich in Africa. And with a new administration that's become very business friendly, I think they thought they could let the currency float, and they found out, that it has been very painful from a purchasing power point of view and from a wealth point of view. We've seen the same in Egypt. That the Egyptian devaluation was 40% at the beginning of March. So I think that there's a bit of a risk-off reason for owning Bitcoin emanating from the emerging markets. We've seen in Argentina with the new administration there. I think the currency, they made official what the black market already knew, that the currency was worth half of what it was reportedly worth. So I think we're getting those warning signals. I also also think, yesterday we got the Swiss bank cutting rates, which was a big surprise. The UK turning a little more dovish. The Fed now a little more dovish. Why? What are they seeing out there? And so many people think of Bitcoin as a risk-on asset, and it certainly has traded like that over time. But we have been looking at it as both.
Bitcoin had a remarkable performance in the first quarter, showcasing its strength over the past 3 years. However, it is important to note that experts are cautioning about potential significant fluctuations as we approach the Bitcoin event. It's wise to prepare for potential fluctuations in prices during this period. In the first quarter of 2024, Bitcoin experienced a notable price surge of 64%, spanning from January 1st to March 31st. This quarter is the third strongest in the past 3 years. Starting from $44,172 at the beginning of the quarter, the value soared to $71,200 by the end. However, Desmond suggests that the consistent pattern of outperforming price performance in weekly and monthly closings points to unique market conditions. It's quite remarkable how the market closed at such high levels, only to quickly retrace its steps. Desmond mentioned that the Bitcoin sale is just 15 days away and is set to happen on April 20th. There are predictions that this event may result in further upward movement in the second quarter of 2024, considering the expected impact. An esteemed crypto analyst with a reputation for providing valuable insights on supply shocks. Suggestions Bitcoin's future trajectory may not follow the same pattern as the previous quarter, and it might face some obstacles along the way. Different phases, Bitcoin could potentially go through a period of consolidation in the upcoming weeks, with its price range likely to be between $60,000 and $70,000. This consolidation phase might occur as Bitcoin gets closer to its previous all-time highs from the first quarter. This period of consolidation is anticipated to persist in the future, culminating in the Hing and beyond. It appears that you possess a solid grasp of financial analysis. As per Capital's report, the recent launch of the Bitcoin ETF by major asset management firms on January 11th has generated a surge in speculation regarding the price of Bitcoin. However, there are individuals who foresee a potential shift in the current storyline, which might not necessarily revolve around Bitcoin. According to Michael Vopp, the introduction of the Bitcoin Interest Spot ETF is resulting in higher liquidity, which is slowly stabilizing the price levels. It is anticipated that this pattern will probably lead to a significant increase.
Risk on and risk off. And I can tell you when we first learned that in 2015, when we took our first position in Bitcoin via GBTC, Bitcoin was about $250. And many people were making fun of us at the time, thinking, oh, they're new. We had just started our funds in October of 14. Oh, they're new. They're just trying to gain attention. This is a marketing gimmick. And so we were really on the spot. First of all, we had done a lot of research. We didn't think, we thought there was real investment merit, but we were watching like a hawk its moves. And back then, Greece was threatening to leave the European Union. And every time there was a flare up, and a fear of another European sovereign debt crisis, Bitcoin inched up. And so we've been looking at it as both a risk on and a risk off asset for quite some time. And the regional bank crisis last year confirmed that point of view, that here Bitcoin more than doubled as regional banks were imploding. So I think many people are beginning to say, as they learn what this is, wow, could it be both a risk on and a risk off asset? We think so. More liquidity, that's good for price discovery. I think it's legitimizing this new asset class. So that's a very good thing. I think bringing in a new class of investor is important. And, one of the reasons that we wanted to do a Bitcoin ETF, or spot Bitcoin ETF, even after we decided that it would probably be very low fee given the way the competition was going to evolve, was, we're looking at Bitcoin as, the technology as well. It is, a financial superhighway, a public good. And so we think educating and offering access to as many people as possible in a less friction-filled way. I mean, many people just didn't want to deal with, wallets and so forth. Is going to, in hindsight, when history is written, I think is going to become a very important moment in time.
According to Trading VI data, the price of Bitcoin has seen a substantial surge of around 68% since the most recent Bitcoin halving in 2020. At present, it is being traded at approximately $66,000. Just a friendly reminder that the highly anticipated Bitcoin halving in 2024 is just around the corner, with less than 3 weeks to go. Based on historical chart patterns, it is projected that Bitcoin's current price of $66,000 could potentially reach $434,000 or $280 per coin by the time of the 2028 halving. Historically, the post-halving rallies of Bitcoin have displayed decreasing returns as time goes on. It is important to highlight that the initial halving in 2012 led to a substantial surge in Bitcoin's value. It skyrocketed from almost nothing to $12.50, resulting in an astounding 12,400% increase. In a striking parallel, the price experienced a staggering surge of 5,200% to reach $650 during the 2016 halving. Similarly, during the 2020 halving, it witnessed an impressive increase of 1,000% to reach $8,000. Thus, the price rallies for Bitcoin have been decreasing by 45% each cycle, and the current rally stands at 6.58% if this trend of diminishing returns persists. Through careful examination of past trends and a comprehensive quantitative analysis, it is projected that Bitcoin will undergo a substantial surge of 360% in the upcoming cycle. Based on my analysis, it is estimated that the price of BTC could reach around $33,600 by 2028. It's worth mentioning that there isn't any solid proof to establish a direct link between the event and the price of BTC. It's important to note that historical patterns can be interpreted in different ways. I anticipate reaching $435,000 by 2028 with a conservative outlook. Based on a report by Eric Balunas, it is speculated that Bitcoin ETFs may outperform gold ETFs within the next 2 years. There is a possibility of the BTC price reaching 6 figures. In addition, the rate of growth for Bitcoin ETFs is outpacing that of gold ETFs, which first appeared in 2004. Indeed, the price of Bitcoin is surpassing that of gold by a factor of 5. The path of Bitcoin mirrors a compressed representation of gold's historical performance spanning 5 decades. It's understandable that some people may feel frustrated. Please like this video and subscribe our channel Everyday Finance. Always keep in mind that having knowledge is crucial, and our aim is to provide you with the tools you need to succeed in your financial endeavors. Until next time, enjoy your investment journey. And we will meet in next video. Thanks.